Right, let's do a Friday opener video. So this, man, it's been crazy couple of weeks. This is Brian Lewis with MMT Investing and Rhino Ralph. So we're gonna we're gonna have a look at this previous cycle and have a look at this guy and see what's going on. So I did an overnight video because we just got intense downward move that broke the bull trap support line. We broke the financial crisis 12-year support line. So we just broke all the support, and now it's up to the bulls to come back and fight back. And let's go back to a previous iteration of the cycle and see what we got last time to try to check out the shapes. Um, so since I started bringing Elliot waves into this model, it's gotten a lot easier. And this is just a 1, 2, 3, 4, 5 Elliot. And you can see when you come down off this Elliott wave, you get a bunch of backtest action, and then you get a swooping, pretty tough backtest. So that's exactly what I would expect now. And then off of that, it's a pretty linear shot down to the dead cat bounce area. And we have these intertangents and these consolidation kind of lines that I'm working on to try to estimate where this dead cat would happen, assuming this cycle model repeats, which is what this model is all about, these repeating cycles. And so to do the same thing here, we get our Elliott. It's a 1, 2, 3, 4, 5 Elliott. And then we get down here below our support and start backtesting it. And then we would get a swooping, like, good backtest. And I think this area right here is a really good estimate of where that kind of swooping, like, real backtest would come out. Here, let's delete this one. Okay, so we come down and backtest this one, come down and backtest this one, but we should see a bigger swooping backtest, and I think it should be in this area just where all of these lines are, because that's a good spot to do it. And that would repeat what we saw last time. And then if we keep going to the next couple of moves after that, so for the bulls, I mean, the bulls need to get back above this support line. This is a major resistance line. So if the bears can reject and go down off of the support line, there's just not a whole lot down here for quite a while. So let's get in here and see for the bears what kind of action we're probably looking for. So it comes down and takes a pretty straight shot downward across. Let's go back and look at it and try to draw it the same way. So we get this inside tangent off of the 3-wave here that kind of undercuts some of the action, tops it, and then it tops the bull trap. And the top of the bull trap, this dead cat bounce, is setting up this outside consolidation zone for the whole wave. So I want to just kind of look at this inside tangent wave that we have here and this angle. So the angle here is from the edge is a straight shot cutting across this line, and the timing is about 1/3. So if you go from here to the dead cat, it's even less than a third. It's almost like 1/4 of the wave timing. All right, so let's go do like a little bit more than a quarter, cut across that line and see what that looks like on this big sized version. Okay, so let's do the timing here. So from here, or we took it from, I can't remember what I just said, from the edge of this next backtest. So we'll start from here, assuming we backtest there, and then we get a straight line down. That is about a quarter of the, yeah, so it kind of chops here, it chops here. Okay, so it's like here and here and here, kind of quarters. It's like 1/4, 2/4, 3/4, and then the fourth quarter is cutting across this purple inside tangent line off of our 3-wave here. So off of this, we would just get an angled break of this line to somewhere around here, something like that, as just a rough copy of what that did. And this line was just kind of wobbling, maybe test that one and test this one from the top and then test it from the back, and then we can get down to a dead cat bounce area with some crazy wobbly action. But that's the general idea of the next leg, is a pretty aggressive downward shot off of a second back test to repeat this pattern. So I guess, what are the numbers? I mean, I can just say like this is whatever date and something as a rough estimate. And then also, oh yeah, this Volcker line. So I just did a video on the Dow, and I realized that the Black Monday bubble on the Dow was a legit, like a bubble crash reversal spot. That's a better spot to put this bull market line than the 82 bottom before the bubble, because it's a steeper. It's where the trend line steepened, like right after the Black Monday crash. So let's do this. Let's change this to Black Monday, because I think that is a better spot to put this. And I also like the name better. It just sounds cool. So we get Volmageddon. So like the Volmageddon name is not actually correct either, because the Volmageddon was the volatility at the beginning of 2018, and this is coming off the bottom of the crash in 2018. But there's not really a name for the 2018 crash, so it's the crash after Volmageddon, this one. And then Financial Crisis is the name of the crash, and then Black Monday is the name of that crash. And I think that's a better line to draw. But also, like, where this line actually is really hard to estimate. It's like a 40-year long bull market line, and like a little 1% swing in this line is huge. So I mean, it could be anywhere in here, and we really have to wait and see. We have to see a back test, and then like a back test, so to really find where the line is. And I have these kind of rough tangent and consolidation areas set up that repeat the pattern that we got back here. Please hit the like button to help me out with the YouTube algorithm. So this kind of thing, but as you get down, it's going to be a longer timeline and less steep. Each level is a bigger timeline, and it's going to be less steep than the previous one. Just as a general idea. So I guess without getting too crazy and going too far, and Black Monday is not 82, it's 87. Yeah, that's a Black Monday line. All right, there's a cool update. Go look up Black Monday and check it out on the Dow, because this chart doesn't go back that far. So I just drew like a rough bull market line that I could see kind of through the financial crisis and the .com bull market. And I was just like, it looks like it goes back kind of to the bottom there in 82. But I looked at it on the Dow, and Black Monday's a serious like crisscross crash where you get that steeper bull market line, which I think is nice, but it's still hard to draw this line on this chart here. But I'll go work on that later. So I guess that's good for now. I mean, this is what I'm looking for right now. Is I've been wiggling these yellow and green lines a little bit to try to get the max reactions, and once you get the pattern, you can kind of wiggle them to where that makes the most sense. Like here, like I had this line down a little farther here, and I think this line works better there, getting back tests here. And then I didn't have this red line in here at the time. I drew this tangent line just I don't think I had this on the last video, this tangent line, but I'm trying to set up, this tangent line is not really a reaction line for right now. It's more of just a line to set up the next level of this cycle, like way out, like years out. So the red line's not particularly important right now, but if this is a good spot to throw that 5-wave tangent that chops the peak off, then I think that also makes this spot just a better spot to aim for, kind of where the red and the yellow cross is a really hot spot to look at for a backtest. And I don't know what day that would be, Monday or Tuesday? What's today? First? Yeah, 3 or so yeah, it could be Monday, Tuesday, probably Tuesday. It looks like Tuesday open or sometime Tuesday maybe we would be reversing off of this one if we get this backtest here. So let's check it out. And then I don't think these swings would be quite that dramatic either. These would be much smaller kind of movement like this. And that's a pretty straight shot on the previous cycle. So that's the cycle repeating thing here. And I guess we get just say the exact targets and see how close it gets. So let's just go like Tuesday morning at 2865, but we're going to get a low here before we get back up there. So just in this 28 range here and stay underneath this financial crisis line. And that's kind of boring, but this is not boring, which would be getting down here to a dead cat bounce area, which is a long way down, and it is above our bottom here. So, is it above the bottom here? Yeah, okay. Yeah, look. So it kind of bounced off the bottom of our B wave here. So let's just draw that in. This or 1, 2, 3, 4, 5. This is the bottom of the 2 wave. It's kind of the bottom of the dead cat, and then it goes back up. So let's just pop it in and see what that looks like, which would be here, and get a little ray going like this. Boom. Delete this. Get the angle the same, but stop at this blue line. And we get 2466 on May 15th. There you go, folks. We have our targets of backtesting this line again on Tuesday, and then our downward S&P target of 2462 whatever on May 15th. All right, so let's see how that works out. See what kind of action we get here. See if the Bulls can fight or if the Bears just rip, because if the Bears start running away here, this is just going to be a super, super aggressive down move with no support. And that is the Friday opener. So what else is going on? Oh, they lifted the lockdown here in South Africa, and by lifting it, I mean that they lowered it from a level 5 lockdown to a level 4 lockdown. And what that did was make it more restrictive than it was before. Like, it's all the same restrictions, except you're allowed to order food, but now there's curfews and you have to wear masks, and there's like specific time intervals you're allowed to go places. Like, they made it more restrictive when they lowered it. And you can't, and they restricted any travel like from region to region. So I think this is what's going to be happening all over the place, is they're just going to be increasing these lockdowns. And if this stock market starts crashing and the international currencies start crashing over the next month, which this model is showing, I think that is going to be a bigger deal than even the health situation is in terms of in terms of stability and all of that stuff and military lockdowns. I could see those increasing even if the health improves. So not to get bummerish, but just doing the model here and just looking at the implications and kind of longer term look at, the zones and all that stuff. So I can do whatever. That's good enough. All right. Happy trading.